Welcome to Easy Driver, the most reliable source of automotive information on YouTube. Thank you for visiting us, and many thanks to those who have subscribed, liked, commented, and shared our videos. In this two-part series, we're diving into a vital topic: what vehicles qualify for tax credits. If you're looking to make an informed choice while enjoying tax benefits, you've come to the right place. Are you curious about which vehicles qualify for tax credits? Look no further. In this video, we will provide you with clear and knowledgeable information on the vehicles that are eligible for tax credits. Understanding the criteria for these credits is essential for maximizing potential savings. So, if you want to make informed decisions when purchasing a new vehicle, keep reading to discover the types of vehicles that can potentially qualify for tax credits. What are tax credits for vehicles? Tax credits for vehicles are incentives provided by governments to promote the adoption of environmentally friendly transportation options. These credits serve as financial motivations for individuals or businesses to purchase or lease vehicles that have lower emissions or use alternative energy sources. By offering tax credits, governments aim to reduce carbon emissions, improve air quality, and transition to a more sustainable transportation system. Importance of tax credits for vehicles. Tax credits for vehicles play a crucial role in encouraging eco-friendly transportation choices. Here's why they are important. Reducing carbon footprint. By promoting the use of low-emission vehicles, tax credits contribute to the global effort of combating climate change. These credits ultimately help in reducing the overall carbon footprint of the transportation sector. Improving air quality. Vehicles that qualify for tax credits generally emit fewer pollutants, such as greenhouse gases and air pollutants, which have detrimental effects on air quality and public health. By incentivizing the purchase of cleaner vehicles, tax credits lead to improved air quality in communities. Driving innovation. Tax credits spur innovation by encouraging the development and production of technologically advanced vehicles. With increased demand for cleaner transportation options, manufacturers are motivated to invest in research and development to create more efficient and sustainable vehicles. Qualifying criteria for tax credits. To benefit from tax credits for vehicles, certain criteria must be met. Although eligibility requirements may vary depending on the country or region, here are common factors considered. Vehicle type. Tax credits are typically available for electric vehicles, EVs, plug-in hybrid electric vehicles, PHEVs, and hydrogen fuel cell vehicles. These vehicles are chosen due to their lower emissions or use of alternative energy sources. Battery capacity. Some tax credit programs consider the size of the vehicle's battery pack. Generally, vehicles with larger battery capacities receive higher tax credits as they provide longer electric driving ranges and contribute more to reducing fossil fuel consumption. Vehicle price. Tax credits often have a maximum limit based on the vehicle's purchase price. This limit ensures that tax credits are targeted towards more affordable eco-friendly vehicles, making them accessible to a broader range of consumers. Intended use. In certain cases, tax credits may only apply to vehicles used for personal purposes. Commercial or fleet vehicles might have different eligibility criteria or separate incentives. It is important to be aware of the specific tax credit regulations in your jurisdiction, as they can change over time and have varying expiration dates or limitations. Remember, taking advantage of tax credits for vehicles not only benefits the environment but can also lead to long-term financial savings through reduced fuel costs and lower maintenance expenses. Federal tax credits for electric vehicles. Electric vehicles, EVs, have gained significant popularity in recent years due to their eco-friendliness and potential cost savings. In an effort to incentivize the adoption of EVs, the federal government offers tax credits that can help reduce the upfront costs of these vehicles. Let's take a closer look at the eligibility criteria, the amount of the federal tax credit, and how to claim it. Eligibility criteria for federal tax credits for electric vehicles. To be eligible for the federal tax credit for electric vehicles, there are a few important criteria to consider. Vehicle type. Only new, qualified plug-in electric vehicles are eligible for the federal tax credit. This includes both all-electric vehicles, EVs, and plug-in hybrid electric vehicles, PHEVs. Conventional hybrid vehicles and fuel cell vehicles are not eligible. Battery capacity. The size of the vehicle's battery pack also affects the tax credit amount. Generally, the larger the battery capacity, the higher the potential tax credit. It's important to note that the tax credit is gradually reduced and eventually phased out as the manufacturer reaches a certain sales threshold. Manufacturer limit. Each vehicle manufacturer has a set limit on the number of eligible vehicles that can qualify for the tax credit. Once a manufacturer reaches that limit, the tax credit begins to phase out for their specific models. It's important to check with the manufacturer or the IRS to determine the eligibility of a specific model. How much is the federal tax credit for electric vehicles? The federal tax credit for electric vehicles can greatly vary depending on the vehicle's battery capacity and overall eligibility. As of 2023, the maximum tax credit amounts are as follows: battery capacity of 16 kWh or more, up to $7,500. Battery capacity between 5 kWh and 16 kWh, partial tax credit based on the battery's capacity. Battery capacity below 5 kWh, no federal tax credit. Please keep in mind that these amounts are subject to change, and it's important to consult the IRS or a tax professional for the most up-to-date information. These are representative of the American situation, and could change or vary anytime. How to claim the federal tax credit for electric vehicles. To claim the federal tax credit for your electric vehicle, follow these steps. Purchase a qualified vehicle. Ensure that the electric vehicle you purchase meets all the eligibility criteria for the federal tax credit. Obtain the manufacturer's certification. The vehicle manufacturer should provide you with a certification statement indicating the make, model, and year of the vehicle, as well as the vehicle's battery capacity. This certification is necessary to claim the tax credit. Complete IRS Form 8936. Fill out Form 8936. Qualified plug-in electric drive motor vehicle credit, when filing your federal income tax return. This form will help determine the amount of your tax credit. Submit the form. Attach the completed Form 8936 to your tax return and submit it to the IRS. It's important to note that tax laws and regulations can change, so it's always recommended to consult with a tax professional for guidance specific to your situation. By taking advantage of the federal tax credit for electric vehicles, you can potentially reduce the cost of owning an electric vehicle and contribute to a greener future. Keep in mind the eligibility criteria, the varying tax credit amounts, and the steps to claim the credit to make the most out of this financial incentive. State tax credits for electric vehicles. When it comes to encouraging the adoption of electric vehicles, EVs, many states in the U.S. offer tax credits as a means of incentivizing consumers to make the switch to cleaner transportation. These state tax credits serve as a financial benefit for those who purchase or lease an eligible electric vehicle. In this section, we will explore an overview of state tax credits for electric vehicles, state-specific eligibility criteria, and how to claim these credits. Overview of state tax credits for electric vehicles. State tax credits for electric vehicles provide a rebate or a reduction in state income taxes for individuals who purchase or lease an eligible EV. These credits can help offset the initial cost of an electric vehicle and make it more affordable for consumers. Each state has its own set of rules and regulations regarding electric vehicle tax credits. The availability and amount of these credits can vary widely, so it is crucial to research and understand the specific incentives offered by your state. State-specific eligibility criteria for tax credits for electric vehicles. To qualify for state tax credits for electric vehicles, there are certain eligibility criteria that you must meet. It is essential to familiarize yourself with these criteria to ensure you qualify for the tax credits in your state. The eligibility criteria can include factors such as vehicle type. Some states may only provide tax credits for fully electric vehicles or plug-in hybrid vehicles, while others may include fuel cell vehicles as well. Purchase or lease date. State tax credits may only be applicable to vehicles purchased or leased within a specific time frame. MSRP limitations. Certain states may impose caps on the manufacturer's suggested retail price, MSRP, of eligible vehicles to limit the tax credits to more affordable options. Residency requirements. Some states may require you to be a resident of the state to claim the tax credits, while others may offer credits to out-of-state residents who purchase or lease a vehicle within the state. It is crucial to review the specific eligibility criteria outlined by your state's Department of Revenue or similar authority to ensure you meet all the requirements to claim the tax credits. That concludes Part 1 of our exploration into which vehicles qualify for tax credits. We hope this information proves helpful in your quest for a tax-friendly vehicle. Remember to like, comment, share, and subscribe to Easy Driver. Join us in Part 2, where we'll continue uncovering more eligible vehicles and how these tax credits can benefit you. Thank you for watching.